This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. So I hold in my hand right now one very interesting book. I did not expect it to be so interesting because it uncovers something that we think we know that we probably didn't really know. The book, Madoff Talks, uncovering the untold story behind the most notorious Ponzi scheme in history. My guest today is the author of that book, Jim Campbell. I take Jim on a whirlwind of all kinds of aspects to this story that you probably didn't know. I sure as hell did not know. And I'll tell you one thing. You don't have to be scared because of this story. But when you hear the full details, when you hear what was really going on, full system-wide perspective, you're going to realize this story did not go away with Bernie Madoff's recent death. It's alive and well. You're just not yet sure what I mean by that. That's why you're going to listen to Jim Campbell and I talking about the Bernie Madoff Ponzi scheme. Without any further delay, let's jump right into my conversation with Jim Campbell. Jim, my first question is related to something from my world, and you'll see where I'm going really quick. My first book came out years ago, and the foundation of that first book was me looking at performance reports that occurred in the spring of 1995. And what I was looking at was the performance reports of Barings Bank's trading account, which was public. Nick Leeson brought Barings Bank down, and boom, boom, wham, bam, thank you, ma'am. He's on the front cover of Time. It was a zero-sum game, and he was trading Nikkei futures, and he lost a bloody fortune. Well, in a zero-sum game, somebody else won. I was looking at the performance reports at that time of a guy named John W. Henry, who currently owns the Boston Red Sox. And anyways, he was the other side of the Leeson blow-up. And so basically, Henry just made a bloody fortune, bought the Red Sox after that. And so it was really interesting because here I was looking at this performance data, and it was so easy for me to look at Henry's trading accounts and realize at the exact same time, trading the same thing, publicly stated as Leeson, that looking at his performance, I took the jump step ahead to say, without having all this rock solid proof, I made it the foundation of my first book that John Henry was on the other side of Nick Leeson. Now look, Leeson had a bad strategy. Henry had a good strategy. They were trading futures markets. It was all in the public. People can say, well, Leeson did something wrong and he went to jail for that and all that kind of fun stuff. John Henry did nothing wrong except being a participant in the market and having a smart strategy. But I could look at that performance data. I was like, well, gosh, I can't be the only one that knows this. Other people know what's going on here. Other people know that who was on the other side of Nick Leeson. But, you know, when Nick Leeson was on the front cover of Time, it wasn't reported who was the winner. He was the loser, but who was the winner. I always look at that performance data and I think to myself, that was my foundation. So when I started to first hear about the Madoff story years back, and I've said this in a lot of my presentations going forward, if you ever see somebody on a performance report that's making 1% or 2% every month, uninterrupted almost, you have got a scam. A 100% scam. I think it's really interesting that when we start to think about performance reporting, whether the example that I give, and we're about to open it up into you, that performance reporting is there for everybody. We're going to find out a lot of details in this conversation with you today. That performance reporting of Bernard Madoff was not secret. A lot of people knew about it. A lot of people are going to get away in history and say that they never knew what it was and this and that. I just ain't buying it. I look back at my example with Barings and John Henry, and I was just an outsider looking in, and I could piece a few things together. So the big dogs knew exactly, in my humble opinion, what was going on with that performance reporting with Bernie Madoff. Is that a fair assessment out of the gate?
Well, first off, Michael, thanks for having me on. And the fact that you're in Ho Chi Minh City is pretty amazing to me for an interview. And that was essentially a brilliant analysis. There are several ways that you could see within 5 minutes that this thing had to be a fraud or something wasn't on the up and up. And this went on for 40 years.
40 years. Repeat that for the audience. 40-year Ponzi scheme.
Likely 40, which, by the way, to run a Ponzi scheme, anything beyond a short time frame is amazing. Now, he had a legitimate business out front, what I call the front of the restaurant, that sort of obscured that, and he had a great reputation. To finish the answer to your question, performance reporting was not only a huge failure, there was another publicly traded fund that had been doing the split strike conversion strategy for 30 years, and all you had to do, whether you were a feeder fund, his bank, the SEC, any of those, was lay those two lines out, and they were completely different. The other thing is, anytime you have a 45-degree line, if people know what I'm speaking about, that's from the bottom, the hypotenuse, right up. That's also impossible in a market-driven strategy. And finally, the split strike conversion strategy was opaque. I never found any of his investors, his victims, who really understood it. But you know what, Michael? When you step back, all it is a highly correlated to the market strategy. It should have been 95% correlated. Harry Markopoulos, within 2 hours, found it was 5% correlated. So it never made any sense, much less how did he get 1% a month. And we haven't even spoke about the fact that he told all his investors in January 1 what they were going to earn. Essentially, it was a reverse Ponzi scheme. If you were his non-high net worth, normal type investor, he's given you at the end 11%. And if you're his big four, the complicit, extortionate investors, the largest one, he's given them 36, 25, 21, and basically taking that from his moderate means investors and giving it to his high net worth investors. One of the things I call for in the reforms part of the book, obviously, is that people make sure there's independent reporting and that it's looked at.
Let me keep you at these numbers for a moment in my point about my situation of just being an outsider looking in, no connection to Wall Street. I was able to look at these performance reports and go, okay, John Henry was on the opposite side of Nick Leeson at Barings Bank. Again, John Henry did nothing wrong. He's a very smart man, great move, one of the most fantastic trades never talked about. In this situation, how many people potentially, I mean, I guess it probably can't be defined, but how many people potentially knew, looking at those performance reports, that this stuff was just BS? I mean, obviously, a lot of people are never going to admit to it. Either they were benefiting or they were not benefiting. And if they were not benefiting, they still don't want to look stupid. Is there any way to gauge as to how many people knew that it was just BS? I mean, look, it's great that Markopoulos gets all the credit and figured it all out, but I doubt he was the first person to figure it all out. Or the guy that worked for him. What was his name again?
Oh, Frank Casey, yeah, Neil Shello were the three.
Before those guys, though, my point I'm trying to pull out of you is there had to have been people long before those guys that knew this was a ruse.
Well, yes, the answer to that is completely. The handful of people went to jail, which obviously is Bernie and his 17th floor staff, who were high school unwitting, I don't want to use the word idiots, but I call them witless conspirators. The willfully blind and the co-conspirators range from all the hedge fund guys, the feeder funds, the big guys. And we're talking hundreds of people likely. And then international feeder funds, which was thinly veiled money laundering of bad characters. They knew. Now, what a lot of them thought, Michael, because obviously they didn't know it was a Ponzi scheme. You don't leave your money with someone that's running a Ponzi scheme. They thought he was front running, and they were winking at that. And they said, this guy is one of the leading market makers. He knows the market. He's taking little ticks ahead of his clients. And that's how he's generating these sort of guaranteed results. So even the ones that didn't know exactly what it was, but smelled that it was not kosher, if you will, they turned a blind eye. It's got to be in the hundreds.
Where are we today in terms of all these years past, the total size of the scam in terms of dollars and money not accounted for today?
The actual principal value of their investments was $19.5 billion. And again, remember that some of that was put in 40 years ago, okay? So that's no time value of money, which I estimated would be 33 billion as of now. The amount that was on their final statements accumulates to $65 billion, $64.8 billion to be exact. And as you know, if you and I had our money in a bank account, we'd like to think that our final statement is actually our monthly statement is representing what we actually own. To find out that that might not be the case is not, to me, the greatest confidence indicator in Wall Street. And they did not accept the final balances. In terms of accounted for, 14.4 billion has been clawed back by the trustee, not out of the SIPC funds where it should be, but from one set of Madoff investors to another. 7 billion of that is from one member of the big four, of which Bernie was instrumental, he claims, in getting a chunk of that back. So the trustee has booked, and I don't want to get too many numbers if you don't want it, $2 billion of fees and expenses, which is 14% of the take, and 7 billion came from one source.
Let me see if I can narrow it down to this. How much money, as of today in 2021, is missing from, maybe it's in dispute as to what's missing. Can we wrap our arms around what amount of money has never been located?
Well, the trustee would say, we've raised 14.4. They lost 19.5. That difference is what is gone likely forever, though he hasn't given up. There's a little complexity there because European banks actually did make a lot of the overseas folks at least whole back to their principal value because they didn't want the publicity coming out that they were basically facilitating money laundering and stuff. And they didn't do it. A consortium of lawyers got that back without the huge fee structure and legal structure, lawsuits, et cetera, that the U.S. trustee, the bankruptcy trustee.
There's a ton that's unaccounted for.
Well, it's a ton if you look at it versus their final statements. Yes.
Let me let you open something up because it's not something that I was familiar with, and I'm sure a lot of people are not. You've said it several times so far, which is money laundering. The way history has treated this, and your book gets into a lot of detail that people are unaware of, but the way this has been treated by history is Bernie does a Ponzi scheme. Okay, there's some other people that are complicit with him. He lives the good life, and now he's in jail for 150 years. So what is the money laundering part there? Walk me through that so myself and the audience can understand, start to finish, how the money laundering was working exactly.
Let me raise a point that goes along with that. You asked why so few people are in jail. The domestic part of this is massive tax evasion fraud, which the big four and his bigger investors all committed, and none of them went to jail. Now, internationally, particularly Sonia Cohn, she ran the Bank Medici in Austria and ran the FEMA feeder funds. What was going on was you had Russian mafia, Russian oligarchs, Eastern European of the same sort, drug lords out of Colombia. They were funneling money basically through her fund. Bernie would say to me, he didn't even know who these characters were, which obviously was either willfully blind or untrue. And then it was, once it was in Bernie's fund, it was totally clean. And that's basically the process.
Pretty simple process. They just go to a feeder fund, and the feeder fund puts it in with Bernie. Did that particular feeder fund know that Bernie was a scam?
It's a good point. Again, you have to believe they didn't know it was a Ponzi because they wouldn't be leaving money. First of all, she knew she's running dirty money like crazy. Secondly, there was just this sort of wink, wink. He's our crook.
So listen, let me read a tweet to you really quick. I caught this, gosh, it was a couple weeks ago, I think. Smart guy, Eric Weinstein, he is associated with Peter Thiel. I think he works with Thiel. And he had a tweet and he said, "The truth on Madoff, we're afraid to say out loud. Many, though not all of his victims, thought he was a crook the whole time. Many didn't say anything because they thought they were benefiting from his financial misdeeds. They just never realized that they were his suckers." What do you think about that tweet?
I think that's fair, but not wholly, because he had a lot of average investors, non-high net worth. They trusted him completely. The CBS Sunday morning news interview I did, they showed what a statement looks like. And it's full of incredible numbers of stocks that he was trading and money in a legitimate mutual fund, it looked like. Tons of trade confirms that were stuffed in the monthly statements, which is not normal, but were in chronological order. They honestly did not have an inkling. Now, these sophisticated hedge funds, by the way, Fairfield Greenwich is the biggest hedge fund domestically. Bernie scripted their answers to the regulators. So obviously they're complicit in knowing that he's fudging around.
You said the little guy didn't know, and I think that's a fair assessment that he didn't know. And we want to feel bad for the little guy that didn't know, but the little guy that didn't know was also getting that 1% every month, wasn't he?
Michael, some of them are getting criticized by their financial advisors. Hey, right now, there's funds out there getting 20, 30% in those boom years, right? He says, you're getting 11%. You should move your money. These folks don't understand that volatility does not equal zero and that you're going to get that 1% no matter what. They really didn't know. And remember, Bernie had a tremendous reputation of integrity, publicly at least. By the way, you've heard of Robinhood, obviously. Robinhood has this image of democratizing the street, populist, letting the guy in the basement. And you know what? To me, that's a complete fraud. It's a pump and dump, leading lemmings off of a cliff. Bernie invented payment for order flow, if you know, directing volume and getting a rebate back so that Robinhood looks like they're giving free trading. Bernie never abused payment for order flow for his legitimate customers. Robinhood has been sanctioned for not only abusing their customers, but they paid $34 million more than if they paid commissions in terms of inferior price execution.
Great point. Let me dig on something you brought up with the trade com firms and all that. So the way this was structured, the building that he was in New York City, 17th floor, 19th floor. 19th floor was the legit operations where his son was. The 17th floor was this secure center that my understanding his sons were not allowed in. I mean, if I was one of his sons, I would have never bought into that. I don't see how anybody could have bought into that. But anyways, they weren't allowed in. They couldn't know anything. So on the 17th floor, the people that worked with him to do all this phony, fakery trade com firms, how many people were in on the actual day-to-day, we're going to work with Bernie to make sure this Ponzi goes up? How many people were doing that with him on the day-to-day?
All right. First off, none of them knew it was a Ponzi scheme. And they were totally unsophisticated versus the 19th floor. And he kind of convinced him, we're trading overseas. And what we're doing is we're entering the data after trades. They were backdating, essentially, which means making up or stealing from prior results that they already knew. And a lot of them didn't realize what was going on. Now, obviously, by the end, they knew they're painting the tape. They're taking money out of the 703 account, which is the account at JP Morgan where the bank was. Then the money was not in there. And they all had to know, in other words, that something was up. None of them really did know it was a Ponzi. Even his right-hand man, who was the guy that built the whole system.
The people that worked with him on the 17th floor
did not know.
Wow, it's just amazing, isn't it? It's almost like the stars had to align for him to pull this particular Ponzi off.
He was the consummate manipulator. His right-hand admin down there, Annette Bongiorno, was making at the end 600, and she's an administrator basically, was making $670,000 a year and had a $58 million fake IRA. She didn't take that money out. She lost it all.
You just shake your head. How in the world could it get pulled off that he could do it? So you've had a unique opportunity here, though, to talk to a lot of people. I don't care so much about what Bernie's opinion is in the sense that, he's going to say whatever he wants to say. The reality is you and I have been talking about what happened, and that's the fact of the matter. You've had a chance to communicate with him. Time goes by. How does a guy like that unpack this for you? What does he want people to know? How does he rationalize his actions? Does he sit up and just say, Jim, I'm sorry. I'm a jackass. I'm an evil guy. I hurt a lot of people. A lot of people committed suicide over my actions. Does he talk like that, or is he just a pathological lunatic?
No, he actually believes that he wore the white hat a lot, that he got a lot of people rich, that they were taking their money out often every month, and they were only going to be clawback the last 6 years. These guys were pressuring him. He didn't see himself as a bad guy. Now, obviously, he admitted fully the Ponzi scheme by the time he's dealing with me. When you talk about almost Nixonian compulsion, where it would go is, this was a legitimate strategy, Jim. And he would go through incredible detail, and he just had to convey it was legitimate. And then he would, after all that, he would say, well, Jim, I realized I wasn't really trading. I mean, he's almost sort of delusional, in other words. He did not see himself definitely as a black hat type of guy. He thought that he did a lot of good. In his very first, in 1962, he actually had a loss on an IPO trade. He bailed them out with his own money. You won't find any Wall Street firm that will do that. The underwriters did not stabilize the price as they're supposed to. He saw himself as getting caught in positions that forced him to do this, and he wouldn't screw his clients, so he would eat the loss and then try and make it up. That's kind of the rationalizations that he would try and sell.
By the way, I should, since my audience, and you can guess on a podcast like this, and this is not to excuse Mr. Nixon by any stretch of the imagination. Since you went for the Nixonian compulsion, and since I happen to be in Ho Chi Minh City, and you're a little bit older than I am, but I've done a pretty good research job on my own, I do know what happened in 1965. In 1965, one guy named LBJ, I think he kind of launched something called Rolling Thunder. At the same time in 1965 in Indonesia, he killed 1 million Indonesians. A great new book out about that. So I think this Nixonian compulsion, I think half my audience might say, what about the LBJ compulsion? So there's a lot of evil shits in our political structure, both sides of the aisle, right?
You're 100% right. I'm not meaning to raise politics in any way. I was trying to raise the complexity of Nixon's brain. By the way, LBJ's brain can be dissected in the same way.
I think they all can. So let me keep you at Madoff, though. So he really, it just becomes one major rationalization. Like, how does he feel about his son committing suicide?
He feels genuine remorse about that, obviously, and he'll take responsibility for it, although he never quite takes total responsibility for anything. There's always something that ends up, I was this guy, that guy. There's always something about it. You asked before, why wouldn't his sons insist on seeing the floor downstairs? It's a great point. In fact, Andy wanted to quit to go to work for Goldman Sachs because Bernie would not tell him what he was doing downstairs. You have to get a deeper amount of time than we have on this to understand how Bernie was able to manipulate his own kids. Now, he did it with his employees. He did it with the SEC. He used to say, Jim, the SEC didn't find it in 5 examinations. Why should my family have had to find it?
Well, in that same tweet storm that I quoted you with Eric Weinstein, he also said this one, quoting Bernie, in today's regulatory environment, it's virtually impossible to violate the rules. And this is something the public really doesn't understand. It's impossible for a violation to go undetected, certainly not for an extended period of time. Bernie Madoff. Well, that's obviously not true. So let's keep it at Washington, D.C. for a moment. When I started doing my research way back in the day, I was doing a lot of FOIA requests to look at performance data for commodity trading advisors with the CFTC. I had very little involvement with the SEC in terms of doing my research, but I did realize that these operations, and I find this with many government agencies, something like the Freedom of Information Act is supposed to be about, well, if you know there's a particular document there in the government and it's a public document, that you should have access to it. The reality is many of these government workers start to take on this kind of parental or parochial type perspective, and maybe they're ultimately are trying to protect their backside. And I have to imagine, but I'm sure nobody got in trouble, how many people at the SEC should be ultimately tarred and feathered for their ineptitude for this entire scandal?
Let me say just before that, you raised a great point on FOIA, because the government stonewalls. I went to the FBI for FOIA on the 17th floor guys, for instance. They would say these guys are still alive, so no. And then, Frank DePascali's dead, no. And then I went again and they said yes. I peeled it. I've still never gotten an ounce out of that, and the book is out. The SEC penalized 8 people, and they were not high-level people. The high-level people themselves even blocked some of the examinations. The SEC Inspector General report was highly honest. They let themselves be looked at, and it went through the total ineptitude. But the SEC released it on Labor Day weekend, Friday evening at 6 p.m. So they tried to bury it. The answer is, no one was held accountable.
I've got not a controversial request at all, but I have a standing FOIA request with the FBI for a deceased individual to get their file. Happens to be somebody that was profiled in one of my books. Like I said, nothing controversial about him that I don't know of. But anyways, that standing FOIA request, I have to wait a little bit of time. The FBI gave me a date estimate, 1,500 days it will take to get my request filled. 1,500 days to get my FOIA request filed.
Scandalous.
What do you do with that, As a midpoint here in our conversation, and we're going to keep diving into all kinds of points and tangents here. All the things that you've seen, this is me going fishing, all the things that you've seen, what's the most shocking or interesting aspect to this entire sordid tale that you found or were exposed to? And this is obviously a personal opinion of yours, but what really strikes you most in terms of you going ahead and putting all your time and effort into something like this? What strikes you most? 2
things, I think. Number one, the complete systemic failure from the regulators to Wall Street to his bank to his employees, and the complete ineptitude. And by the way, we haven't talked about SIPC. SIPC was another complete failure. SIPC was billing its firms, whether it was Goldman Sachs or a one-man guy in Ho Chi Minh City, $150 a year for the fund. So there was no money in there. They'd been warned by the GAO 16 years before. They were inadequately prepared. We can go through that in eons of detail. And that was one of the major objectives of the book because, A, people don't know it, and nobody's ever put that whole architecture together. The second thing I think was getting inside Bernie's mind, again, that he could build on one floor probably one of the more ethical businesses in Wall Street, and that was not in conflict with his customers. You know, much of Wall Street is. And then at the same time, the biggest criminal enterprise at the same time for the same period of time. I think that is just such an unfathomable concept that one man could compartmentalize and do that. And the other thing was just the complete failure of the whole system. That investors, by the way, all believe the SEC is protecting me, SIPC is protecting me, my Wall Street broker is supposedly protecting me, Bernie's supposedly protecting me, all of that in colossal willful blindness or colossal ineptitude.
Did he tell you why he started this? I mean, this guy could have been worth hundreds of millions, I'm guessing, from just his normal business. That was a success.
$3 billion, a legitimate business alone had market value.
Was it just the fact that he was, I'm so clever, I can pull this off? Or did it started small and it just kept going and he kind of just doubled down on the whole thing?
Yeah, see, that second part is clearly what the logical thought was. He told me a story along those lines, which he had never told the public. So then, of course, I had to vet it. But when you get underneath the hood, he was running them. He had about 20 people, mainly friends and family, in the hedge fund side of his business.
17th floor, you mean?
17th floor, yeah.
Okay.
And that he was running from the start. And I think a major insight into his mind again is that the market-making business fit his psyche perfectly, tightly controlled, and commissions whether the market's up or down. He was an OCD control freak. He automated the business ahead of Wall Street. So he was making spreads on the commission side of the business that was pretty much guaranteed. So then he said, I've got a few 20 clients here. They want me to start investing as a money manager. And he quickly found out he couldn't make money on every trade. He couldn't deal with it, couldn't accept it. And he didn't have the moral courage to say, I shouldn't be in this business.
I saw recently, pulled it up on YouTube, I watched the 60 Minutes interview. It might have been with Steve Croft. I can't recall. It's with his son and his son's wife and the wife. So I think it was the three of them on the 60 Minutes episode. I got to say, none of those three people moved me at all. I watched the whole thing. I watched a 13 or 15 minute clip. They didn't move me at all. His wife in particular did not move me at all. I just felt like these people, they saw all the benefits and they just didn't have curiosity, apparently. I mean, I get what you're saying, that this guy was so clever and so smart and he hit everything, but I got to say that particular interview, they didn't move me at all. Maybe they moved other people. It didn't move me.
No, it's interesting. First of all, I never watched that. I didn't watch any of the Madoff other stuff because I just felt that I was inside the family. So I haven't seen it. But you know what? You're exactly right. First off, Ruth had cult-like devotion to Bernie. And if you know anything about cults, you have to be deprogrammed. So yes, she did not want to do that interview. Andy forced her. She didn't like the way she was portrayed in the book that interview was based off of. When people ask me, did they know or did they not know? They need to know that what comes with that is inexcusable plundering of the firm, using it as a piggy bank, which is what you were alluding to when you're saying they lived off of it. That cannot be sugarcoated in any way.
You had a chance to sit down with her?
I spent a ton of time with her. Yeah, we had lunches for several years.
What did you take away from her? Again, all I saw was the 60 Minutes interview. She just seemed like an older lady who was devoted, and I'm not trying to be mean, but it just didn't seem like, she wasn't terribly sophisticated about matters and whatnot. And just didn't really, not a terrible amount of there, at least the way she was presented in that particular interview, which I know can be unfair sometimes with interviews. But what was your takeaway on her completely?
First of all, at the end of the line, I do find her more inscrutable than that because that's how she portrays herself. By the way, I asked her, what was the first thing you said when you found out about this? And she said her first thing was, what is a Ponzi scheme? And I believe that's probably a true statement.
She had no education?
No, she's written a book. She's got a master's degree in nutrition. Went to Queens College. Get this. This doesn't look good. It's part of my chapter 8 on Did They Know? She was still balancing the 703 account 1 year before the Ponzi died. She was balancing it like a checking account. So she had no idea why 40, 50 million was in and out. It was just big bucks going in and out. She didn't know. You and I would have asked the first question, which is, why am I seeing no trade counterparties in here? Why am I seeing no dividends in here? This is an equity-based fund. What the heck's going on? But she didn't know to ask any of that stuff. You can't portray her as completely empty vessel when she's smart and she's been with them all those years. She's seeing the account and everything. It's not black and white. Andy, I do find to be a high quality. So was Ruth. A lot of integrity, a lot of character, and would never have ever dreamed that his father would do something like this. Was instantly devastated, instantly turned them in, didn't run to move their money, hide their money, delay a week or two, leave the country, none of that.
Yeah, I mean, that's commendable. They probably also realized at that point in time, no matter what they did, it was all going to be tracked down. You mentioned earlier 4 big players. Why don't you explain that to the audience? I think we kind of jumped in there and that might have gone past them. You were talking about these 4 players that were intimately involved in getting special deals. Why don't you explain that from the top?
Yes, particularly Jeffrey Pickauer, who was number 1. These were 4 guys that got in with Bernie very early when he was doing convertible securities hybrid. He was one of the leaders in the street there. He automated the process of the conversion, which I believe this took 3 weeks back then when he first started. They became essentially sources of crises cash shortfall covering. In other words, don't ask me how you would assume they wouldn't know it was a pure Ponzi scheme then. They would come in and sometimes they wouldn't even put up their own cash. They'd put up government bonds or something for collateral. If you know Wall Street, a firm can't use their client's capital for collateral. Basically, what was happening was they bail him out. He became dependent on them. He couldn't stand them except for Norm Levy, his second closest big 4, who he did view as a father figure. But he became very resentful. They basically got to the point, Pickauer in particular, could call in to Annette Bongiorno and say, I need this capital gain, ding, 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 now. And then call back 4 months from them and say, I need a capital loss now for tax purposes. They ended up dictating performance results to the wizard behind the curtain, who you would have thought controlled everything and controlled in the inverse way. And Pickauer made $7 billion out of the Madoff hedge fund Ponzi scheme. Bernie himself stole only $800 million into the back door of the upstairs legitimate business to keep it floating, plus whatever they plundered amongst the family, giving loans to kids and stuff. Pickauer was the big winner out of this by a huge factor.
How much of that 7.2 billion did he keep?
He returned that 7 billion because the trustee was going after 2.5 billion, but Bernie knew he had money at Goldman Sachs and other places. They didn't realize he probably had 2 billion left. He drowned in a pool, by the way, but they were not left destitute. He put in about 250 million, maybe over the entire time he was with Bernie, and he withdrew 7 billion. It's incredible. And people don't know this. People do not know this. When they're going to read this book, they're going to be stunned how little they know about the whole case.
It's a tough subject in the sense where a lot of people don't want to know, right?
Yeah, and it's obviously very embarrassing for the whole system. You know, does JP Morgan want that they missed this in 3 different ways, that they could have solved it in 5 minutes? Does the depository trust company want to, that could have been solved in 5 minutes? That's the SEC's fault, by the way, not the DTC. There's so many ways this thing should have been solved.
There's a lot of smart people involved here. So if we talk about somebody like JP Morgan, or we talk about the SEC, again, you have to wonder about people out there, and this is just a theory, that they knew exactly what he was doing. Let's say, for example, just hypothetical, that perhaps there were people at JP Morgan that knew exactly what he was doing. They realized that the way it was structured, they were always going to have plausible deniability. Why not collect the skim or the fees or whatever they might be able to get? Why stick our neck out, so to speak? There had to have been a lot of people like that, of like, why stick our neck out? Because then it's going to make us look bad. We know we're not really going to be responsible for this thing, so let's don't try and pull the covers off it.
I would say that's fairly accurate. The only thing I would say is it wasn't a conspiracy or actual out-and-out knowledge at JP Morgan, but there's a whole lot of inexcusable stuff going on. They knew that Norm Levy and Bernie, unrelated to the Ponzi scheme, were check kiting to the tune of $90 million a day for years. The bank tried to invent a synthetic Madoff without getting into too many details. There was so much demand to get into the real Bernie that they invented a synthetic that was designed to mirror Bernie. How did they guarantee they would mirror it? They put their own money into some Bernie hedge funds. They would be able to show they were mirroring it. They started to get suspicious that something was up. Again, was it front running? What was going on here? Was it a Ponzi scheme? They took their capital out while they left their customers who were in other divisions invested with Bernie. So the bank comes off looking very badly on this whole thing. And of course, the third way is obviously they knew what he had in his account. They didn't even know, Michael, that it was the account for the Ponzi scheme. They thought it was the market making account, which had been at Bank of New York for 40 years. There's a lot of ineptitude. They will say they were unable to connect the dots because they didn't have the horizontal systems across their silos. For instance, the UK did eventually, which was where they were trying to invent this synthetic Madoff, they did eventually report it to the SEC equivalent over there. That information was never reported to the US SEC or the US JP Morgan bank divisions.
How many people are currently in jail for this?
That's a good question. I think they're all out. Peter Madoff had the longest term of 10 years, and he got out last year. Annette Benjerno got out in 2019. The rest either got off for cooperating.
This complex tale of a 60-plus billion Ponzi scheme, there's only one guy currently serving?
There's nobody serving. Bernie just died.
I guess that's how much I pay attention, huh?
That's, by the way, how you get on CBS Sunday Morning, because he had died the week before.
Yeah, I did not spot that at all. You look, hey, look, I have a good excuse. I'm in Saigon, right?
No, it's understandable. And by the way, that's one of the reasons there was all this interest in the book. The book was coincidentally, the book was coming out 2 weeks to the Tuesday after he died. And that was pure coincidence. We didn't manipulate it. We didn't move it up or anything.
You've been scheduled with me long before that. You guys even drop me an email and say, oh, Bernie died.
I'll have to talk to my publicist. Yeah, I was wondering, a few minutes back, you sounded like you were talking like he was still in prison. So
no, it's okay. Look, it's raw and unfiltered here. The fact that I was not keeping an updated tab on the biggest Ponzi scheme guy in the world, I really will not lose any sleep over that. We can officially say now, as I recover from looking like an idiot that I did not know Bernie was dead, nobody's in jail.
Nobody's in jail. And by the way, the news that did spread, there's a picture in my book of an American Express account for the corporate firm that shows how badly the family abused it. Ruth, on the month I put in there, was charged $57,000 on the corporate Amex card. That one statistic, Michael, was all over Europe. In all the tabloids in particular, the headline, 57,000. It didn't relate to the Ponzi scheme, or it didn't mean that she knew about it. But just that little fact was suddenly what was getting all the attention from Bernie dying. So it shows you how this thing spreads and how the media can actually end up distorting it. The Guardian, which is a very reputable paper, quoted his secretary, who was a big source of mine, as saying Ruth had to have known about it a few weeks before or sometime before. By the way, she did say that, but it was the exact opposite of the intent of the quote. So it just goes to show you.
As I look at all of this, and again, we're only scratching the surface. You said that at the beginning. We're just going to scratch here. Philosophically, if I look at all of this, these structures, people that want to get rich, money laundering, massive tax avoidance, how in the world can anybody say with a straight face that, well, this is just the only one?
You're exactly right. I mean, in fact, everybody's criticizing the current president for raising taxes. But one of the things he wants to do is put a big investment of $80 billion in the IRS. They don't have the means or the people to go after all this offshore money that is sitting there. And Bernie told me that one of the big unheralded scandals is he knew a lot of his clients had offshore money they were feeding to him that they weren't reporting to anybody, which meant the banks that it was housed in didn't have to pay them much interest because they knew that it was unreported money. And the guys out there that were making their guaranteed money with Bernie weren't reporting any gains or whatever. And that's completely unacceptable. It's completely illegal.
By the way, in terms of, you just mentioned a tax increase, and again, 50% of the audience will buy into that and 50% won't. I would throw out there, I would say, well, hold on. With modern monetary theory, we don't need to have taxes anymore. The Fed just makes up money. They just add some zeros and they send checks out to everybody. We don't even need taxes anymore. We just make up money in America. We don't have to do anything. We're just rich. We got aircraft carriers and nukes. We can just debase the dollar or down to, whatever. And, everyone will just always believe in us, right?
You're not going to get me to buy into that approach.
Because, you make the example, you say something about the IRS and beefing it up. I think anyone can follow the logic and say, well, if they're so understaffed, they can't figure these things out. But then I think about, well, what about the SEC? What about the CFTC? I mean, I just have a hard time imagining that this is the only one. I have a hard time imagining that anyone's going to ever wrap their arms around this stuff. And I don't know, maybe at the end of the day, no one really cares, do they? The numbers, though, okay, 1,000 of the 16,000 victims had assets under $500,000. Conceptually, those are kind of like just the John Q. public getting screwed over versus all the folks that are running this massive amount of money. Ultimately, we're 10 years gone. I mean, for me, the most important thing about your work is that it could happen. The nice little neat story of one guy, Bernie, getting all the blame, okay? Clearly, that's not accurate. There was a lot of people involved. Then when you take a step back and you realize how many people are involved, Bernie's dead, no one's in jail. I think the biggest value in your book is just to realize that this is the playing field. And you have to imagine that this kind of stuff will be repeated, wash, rinse, repeat, like they say in the shampoo bottle.
You have just brilliantly summarized my purpose of the book. That is the takeaway. People think the sex is just Bernie and Ruth and Andrew.
It's the system.
It's the system. It's the epic failure of the system.
And that's not being fixed, as far as you and I know, right? How is that being fixed?
The SEC is better at detecting Ponzi schemes. I'll give them that. The problem with the SEC is that people assume it's a cop and it's protecting you. It's not a cop. It's not protecting you. It comes in afterwards when it's too late and tries to clean up messes. That's what it does. It's not set up to proactively or knock stuff down or get out front or actually penalize people. As you know, whenever you sign these decrees, you say, I don't admit any guilt.
I'll give you a quick example, just as we're talking about this massive scheme. It's giving me a memory of going to visit my grandfather in 1994. He had just had a second stroke, and I walked into his house in Southern Virginia, and he was sitting in the chair, and he had that unfortunate big grin on his face, really didn't know what was going on still. I was just a recently minted MBA, and we're starting to have the tech boom in there in 1994. And I started looking through his trade com firms, and I'm thinking, well, how the hell is my grandfather trading still? With all due respect, he did not know his name at that point in time. I started looking through his trade com firms. He's basically buying and selling tech stocks, buying a tech stock on a Monday and selling it on a Tuesday.
Yeah, it's called churning, right?
Clearly, the broker was up to no good. But you know what? Nothing happened. It was a really messy process to get anything to happen. And it was going to require a lot of family time and effort to pursue it. The system is not built that way. I imagine there's a lot of people listening right now that, oh yeah, I might have seen that before in my parents' account or my account or whatever. You can't trust anybody except yourself in many ways, unfortunately, when it comes to your money.
That's what I say in the beginning of the reform chapter, which is you need a Hippocratic oath for investing, which is do no harm. Don't trust. Don't give your money to someone who says, I can get you 20% by year end, or that you don't have a clue what the heck the strategy is, and that you think that a heavily trading-based strategy can work. It generally cannot. The way to get rich is the way Warren Buffett says it: periodic, regular investments in low-cost index funds, and sit and hold it. And as I say at the end, Bernie was giving 11%. The market has averaged 9% over 100 years. I say, take the 9% and sleep.
But you know what? Let me give the flip side of that. The Bitcoin side, for example. That is one volatile, crazy thing. Up and down 80% or more, whatever. But at least it's transparent. You can see the price every day. So if you want to get into Bitcoin because you want to make 20% a year, people have been in for a while, been a lot more than that, but at least you can see the movement. It's open. There it is.
Yeah, my problem with Bitcoin is that behind it, it's facilitating all kinds of dark web, illegal, terrorism, sex slavery, all kinds of bad stuff is going on there. There's no transparency into the illegality of it.
I'm not going to argue that at all. It's past my pay grade. But in terms of just the average person that wants to use Bitcoin to buy and sell, at least it's transparent in that sense. But in terms of the dark activities, you already made the case in this conversation that the so-called good hedge funds and the feeder funds and Bernie Madoff and whatnot, they were taking in all kinds of money from those same savory characters. So the chessboard, the pieces just move around and whatever opens up.
Exactly right.
For decades, there was Bernie Madoff facilitating, and now there's going to be various crypto facilitating. That's just human nature to get around whatever's in front of them.
They'll always do that. Human nature.
Hey, Jim, really cool stuff. This investigative journalism stuff takes a lot of time. There's not necessarily a lot of reward. It's obviously a passion play of yours. Something scratched your itch and you said, I'm going to pull on this string, and you did. Like I just said a few minutes ago, I think the most important aspect is that it tells us all that, hey, system ain't getting better necessarily. You make that point strongly.
I have to say that it was a great interview. You obviously understood how to get at all the key levers here, starting off with the performance metrics monitoring. You're right. You have to kind of have a stick to it. It was Harry Markopoulos's I joke we have one similar trait, which is too dumb to quit.
It's just because I think sometimes when you find yourself in the middle of something, you find a speck of truth, and sure you did know this, that you found a speck of truth that almost no one else knows. Then it becomes this compelling push, this impulse that you want to get it out there. I'm sure that's a lot of your drive.
It is, when we say no one knows, it's really more, in my mind, no one has put it all together.
That takes effort. I give you props. The book, Madoff Talks, uncovering the untold story behind the most notorious Ponzi scheme in history. Jim, where can we send people? Amazon for the book, all that kind of fun stuff.
My website, MadoffTalksBook.com, has all the interviews on it, so it's very interesting. Right now, Amazon is out of the book, so Barnes & Noble and Walmart online are where you can get it soonest. And then obviously, of course, you can put an order in at Amazon. It's from McGraw-Hill. Mike, you've been great. It's just been a lot of fun doing a long-form interview, especially with your knowledge base.
Again, back to my early thing with the performance data. I would not be talking to you if I did not sit there and was matching up, looking at these month-by-month performance data in 1995 and realizing I knew something that other people didn't know, or I knew something that other people knew, but the other people that knew, they weren't going to reveal it. So I was going to reveal it.
Well said.
That's, it's huge. It's fun. Jim, great stuff. Thank you for coming on and giving me some education.
Thank you, Michael. My honor.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash, or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.